Perfect. All right. Liz, can you hear me okay?
Yeah, I can hear you.
Okay,
Yeah,
I'm sorry about all these.
That.
Yeah, I'm sorry about all these technical problems we're having over here. It's like one thing after another. But yeah, so we should be
We'll just
okay.
blame it on COVID.
We'll blame it on COVID. That seems to be the thing this year and last year that it's been happening a lot. So, but yeah, just to continue on from where we picked up. So once we do negotiate that offer with the seller and they're happy, we're happy, we've both come to terms, we'll actually sign the contract. And in North Carolina, just so y'all know, it's not a fully executed contract till both the buyer and seller do sign. And we'll draw up the contract. We're going to send it to Liz or whoever your mortgage broker is, and or your loan officer, and we're going to send it to them. And just moving things in the background, and we'll send it over to them, and we'll start the due diligence process. And is there anything specifically, Liz, that you once we send over that contract, is there anything specific that the buyer needs to do at that moment, or how does it look once we go under contract from a lender side?
Right. That's a great question, because we get asked that a lot. Once the buyer and the seller have come to terms and they have a fully executed contract, that's when the lender steps in and we do our process. We take over. We actually have the client sign some paperwork for us. The most important thing for a lender is when we're looking at, say, for example, a North Carolina contract, there is what they call a due diligence period. And that's where the agent, the client, and the lender have to work very closely together, because that's where you've got money at risk. And what I mean by that is that it is the lender's responsibility during the due diligence period, while the agent is working with the buyer doing all of their inspections, the lender has to do two very important things. We have to make sure we have the appraisal on the property completed, and we have to make sure we have loan commitment, which means we have processed the loan, everything looks good. We just need basic items such as title work. If the lender does not do those things in a timely manner, then you know as well as I do, Ethan, that puts the client's money at risk. Earnest money, due diligence. We do not want to be the reason that a client loses that earnest money or due diligence.
Correct.
And so we are actually working very closely with you, the agent. If you guys are doing any home inspections and there are any issues with the property that you think that we need to be aware of, that's when you step in and work closely with us, so we make sure the client gets to the closing table. Yep,
we tend to do that quite a bit, because when we're walking through homes, we're always like, well, what is there anything, say, for instance, say you're doing an FHA or a VA loan or something that has some guidelines that a lot of the loans have guidelines, and you're like, well, does it have anything that kind of sticks out that would be a potential problem? And we want to make sure, even if we're just going under contract, maybe or bring it up to the lender and ask them, like, hey, is this a potential concern we should have, and go ahead and get that out of the way.
Right. Well, and the one thing I want to add to that, and that's a great segue, is the agent is the eyes and ears of the lender. When you guys are going out to look at the property on behalf of the buyer, we need, and we're going to ask, and you and I've been through this transaction many times, we're going to say, hey, Ethan, do we have, for example, if we're looking at an FHA loan, do we have any peeling paint? Do we have any windows that don't work? Do all the doors and windows open and close? Because there are certain things that the lender and the appraiser, the independent third party, that's an appraiser, looks at to make sure that the property is worth what they're saying. If you come back to me and say, we've got peeling paint, we've got this, or any concerns, then we have a plan in place to do that. So yes, you are my eyes and ears when you're out of that property for the buyer.
Right. So, so what is what is safe to say? What's a safe, how much should people budget whenever they're planning to buy a home ahead of time? Like, what should they budget for? And what I mean, like, exactly, well, like, I know you need to save for like your down payment. You need to save for your closing cost. You have some other things. Like, what are some of those costs that's involved that people should go ahead and prepare for?
Sure, absolutely. When we actually have a North Carolina contract, since we're talking about North Carolina right now, when you go to contract, there are things that you have to pay for upfront. Your agent is going to ask you for earnest money, due diligence, and we'll explain to you what that is. The lender is going to ask you for money to pay for the appraisal. And then there are home inspections that are paid for upfront. Most of the time, and please step in here, Ethan, if you have experienced others, most of the time, the home inspectors, pest inspectors, they always want to be paid for upfront. So let's say, for example, Ethan, let's look at a $200,000 house. If we're looking at a $200,000 house, I'm going to require the appraisal of $600 upfront. You as the agent, what would an earnest money check or what would a due diligence check and a home inspection run on a property that's say $200,000 in Charlotte? What would that look like?
So let's say a house is $200,000. I always say it's safe to say you're going to be paying for the due diligence, or you have your due diligence fee you'd have to pay for. You have your earnest money, other things. Those are paid not when you make the offer, but once you go under contract. That's when you would have to pay those two fees. And to simply put it, I'll explain that in just a minute, what those two separately are, but other costs that you should also get ready for is that home inspection. That's another upfront cost that a lot of home inspectors, they want that paid ahead of time. Every once in a while, I mean, you can find one that will take it at closing, but usually that is something that's paid ahead of time. And the other thing was the appraisal is another thing that you would pay for, which is typically around like that $500 price range. And
So
I don't think that's going up either.
So
yet.
yes, and it depends on the loan program. Some appraisals are more or less. So if we take a $200,000 house, to give our listeners kind of an idea of what that looks like, on a $200,000 house, the home inspection is going to cost, let's just say, about $600. The appraisal is going to be $600. Earnest money on a $200,000 house, what are you seeing in the marketplace? Are you seeing $2,000 for earnest money? Are you seeing $3,000 for due diligence? What do those two figures look like? So then our listeners can say, okay, on a $200,000 house, I need to budget, meaning I need to have money in the bank of about $6,000 to be able to buy a house right up front. What do those two figures look like?
Right. So let's say for $200,000 house, I say take about 1% of whatever the amount of the house is. Take 1% of that cost, and you're going to divide that into your due diligence and your earnest money that you're going to put down ahead of time. And for $200,000 house, that's going to be, if 2% of that is going to be $2,000. So you could either divide that up, or you can put more down if you'd like to, which we're seeing that with some offers, just because it's really competitive in the market. And sometimes that might be the deciding factor if you're going to win, if they're going to choose your offer or not. So that is all negotiable with the seller, but yeah, to answer your question, $2,000 is about what, on average, about what I'm seeing.
Okay, so if you're seeing $2,000 for earnest money, due diligence, and then, so technically the buyer needs to have somewhere around $4,000 to be safe to be able to go to contract. Okay, perfect. Right. As far as the rest of the fees, people always ask me, what other things do I have to pay for? What's all involved? So again, let's take this $200,000 house that we're talking about. Your earnest money, your due diligence, that goes toward closing costs or your down payment, whichever comes first. For example, if you're trying to do a $200,000 house and you're trying to put 3.5% down, which is an FHA, that is about $7,000. Right. So if somebody's looking and saying, hey, whoa, you just told me that I need to have $4,000, where am I going to come up with the extra $3,000? Well, don't shy away from buying a house. There's all sorts of options for you out there. There's down payment assistance out there. There are grant programs. North Carolina Housing has some great options. So that's why it's so important that before you go jumping onto the world of Zillow and the internet trying to find a house, that you need to make sure you talk to your lender, because you want to know what kind of fees are involved. So when your agent says, oh, I found the perfect house, and you fall in love with it like the perfect wedding dress when you walk in the house, you're ready to be able to buy that property.
Right. And kind of to add to that too, and part of the closing costs, that is something we can actually negotiate out with the seller and have them pay a portion or even all of your closing costs. And we see that every now and then. Being in a more competitive market, we don't see it as much, but it does happen. And there's still deals happening like that today. And that that is something that has saved a lot of buyers that I've worked with.
Right.
They're like, well, we don't have that much money
Right.
to start with. And but we really would like to buy a house. And I'm like, well, there's still options for you. There's loan programs that you don't have to put any money down or just very little.
Right.
And I want to go ahead and just ask you what are some of those options if people, let's say they don't have a lot of money to start out, like what are some of the options for them?
Right. And that's a great question because I see this every day because, when I bought my first house years ago, I didn't have money. I, was able to go to my mom and dad and say, can I borrow $2,000? I want to buy a house. Luckily, when I bought my house years ago, and that kind of dates me a little bit, that's what you did. You either had family that helped you because there were no programs like we have now. In North Carolina, there are actually 4 different down payment assistance programs that can help buyers get into a house. House Charlotte has programs, North Carolina Housing, you can get $8,000 to $10,000 to help you with down payment. So there are requirements for that. You have to have certain credit scores for that, income for that, but there's money there to be able to help you get into that house. So we always want to tell customers, don't think that you can't buy a house because you don't have any money, because there's always ways to get people into houses.
That makes sense.
Yeah. And so the first step in the process, obviously, is to talk to the lender. And if you have, an agent that says, hey, I've got a lender, trust the agent to get you directed in the right direction. If you don't have anybody or you're scared to death to talk to anybody, feel free to pick up the phone and call me. I'm more than happy to help. I've been in this business 25 years. I've seen just about everything you can see in the mortgage business. Let's talk a little bit about, Ethan, once we get to contract and we've actually gone down the road and we've had that home inspection, I get a lot of my buyers worried about what happens with the home inspection if there's something wrong with the property.
Right.
What happens? Because we tell them, you've got money that is potentially at risk with due diligence. But what happens to a buyer if there's something wrong with the property? Does the seller have to fix it? Can you negotiate? Can a buyer walk away? Explain that a little bit so our audience understands what that looks like.
Yeah, great question. So with that being said, almost every house is going to have something wrong with it. There's not a single house out there that doesn't have at least a crack in the wall or something. And that can, even the new construction homes, people are like, why would I get a home inspection on a new construction house? And I'm like, well, you would be surprised. Sometimes they miss things. They might put something in a spot that doesn't make sense. You never know. So I always recommend with every single home buyer that I work with, I recommend that you do home inspection, because if there is something that does come back, and this is back to answering your question, if there is something that is wrong on the home inspection, what we're going to do is we're going to take a look at that and go through it together, and we're going to see if there's any of those items that are major deal killers, and if there's anything that you would like, oh, well, I would like to ask for that, and just see kind of what the seller would say. So I always say, let's put it out there. Let's get together a repair request form. Let's send it over to the seller. Let's see if they are open to fixing any of those items. And then at that point, if they are open to fixing those, that's great. If not, then we'd be like, well, there might be a possibility where they'll be willing to come down off the purchase price, or just offer a little bit of a credit back toward closing, or they might just fix that item altogether. And that's typically how it goes. It would meet in the middle, or they might just do everything. You never know.
So you're basically saying that the home inspector's job is to find,
correct,
not so much something wrong with the house, but basically let the buyer potentially know what the condition of the house is. Does that mean, and I have buyers that come into my office all the time, and you and I just had one of these, that the inspection report was about 79 pages long, and it was everything all the way down to, it was missing an outlet cover. And the buyer got a little panicked and wanted every single thing on the list. Now, as an agent negotiating repairs, are you negotiating everything on that list? Are you looking at the major things to have negotiated? Or are you looking at things like, what would cause my buyer the most money? How do you negotiate the repairs? What are you looking for? The worst things on the list, like, oh my gosh, it needs a new HVAC. The seller says, no, it doesn't. It's in working order at the time it's inspected.
Right.
What are you seeing that sellers are pushing back not to be able to repair or won't repair?
Yep. I always look at the deal killers for that buyer specifically, and see what it is that they might, if the seller doesn't do anything about this, is this going to kill the whole deal? Is it worth losing that home over? And if it's something that you would like, I mean, like I was saying earlier, like if it's something that you would, I'm going to say these are high priority, then you have your middle, and then the low, like you said, like the outlet covers. Those are things, cosmetic things that we try to stay away from, just because it makes, you have in my opinion, if you send a seller a long laundry list full of inspections that need to be done, they're going to be like, oh my God, we're not doing any of this. And if you just put in like one or two major ticket items or that need to be fixed, it's like, okay, well, let's address those, and they might take it a little bit more serious, rather than just throwing the whole report at them at once and being like, well, we're not going to deal with all this. Let's go find another buyer. Tell them no. So yeah, I try to stay focused on the major ticket items and the deal killers for that buyer.
Okay. And the other thing too, if our listeners are out there and they're going, oh my gosh, well, Ethan just said he's going to ask the seller to pay to fix the major things and not all the way down to the outlet covers and things like that. What happens to everything else on that inspection report? Well, at the end of the process, you can order what's called a home warranty. A home warranty then, and Ethan will talk about that as well. Just know there are things out there to protect you. I personally have a home warranty on my house. I've had my house for 15 years now. I had an air conditioner go out. I had a water heater go out. I had a problem with a refrigerator. Those are big ticket items. And if the seller says, I'm not willing to fix those at the time you go to contract because they are in working order, and that is all that is required by North Carolina law, that they have to be in working order at the time you go to contract, you can then order and pay for a home warranty, or even have the seller pay for a home warranty as part of your contract offer. Absolutely. And that will protect you for a minimum of 12 months from the time that you close. And then you can do what I did, and you can renew that home warranty every single year. So when those big ticket items come up, you've got something to protect you. You've got a company that's going to come out, inspect those, and if they feel they need to be replaced or repaired, they're going to do it for you. And you pay a service call to do that. So as our listeners are out there talking, going, oh my gosh, it sounds like there's a lot to buying a house. There are steps to buying a house. There are a bunch of steps, but you want to make sure that you have the professionals that are here to help you. And you also want to make sure that your budget is ready to buy a house too. So let's say, for example, let's go back to that $200,000 house. Let's say that $200,000 house is, let's just say $1,000 a month. Okay. And that's what the principal, interest, taxes, and insurance and private mortgage insurance. That's what your payment looks like. Well, Ethan will tell you, just like I will tell you, that when you buy a house, your payment is not just $1,000 a month, because as you're renting apartments or you're living with family, you're not paying the water bill, the light bill, the cell phone bill, the cable bill, the trash bill. All of those things are extras when you go into being a homeowner. So when I tell people, look at your budget, if you're paying, let's just say you're paying $1,000 a month right now for renting a place, and you say, okay, that $1,000, I'm tired of paying somebody else's mortgage payment and I want to buy a house. Make sure you budget about $1,400 a month minimum, because that's going to pay for your other expenses. So when the mortgage company comes to you, or the mortgage banker, and you're sitting down and says, what do you want to pay every single month? Make sure that you have that little budget, but make sure you tell the mortgage person, if they're a good mortgage person, they are going to ask you, and I will explain this to you and what I mean by that. And I'm very serious when I say this. There is a difference between what you want to pay for a house monthly and what you can qualify for monthly.
Right.
And what I mean by that is, when you are looking at your paycheck and you're working, you're working a 40-hour week and you're making good money and you get your paycheck, it's not what the mortgage company looks at. The mortgage company is going to look at what your gross pay is, and everybody knows that's not what ends up in your checking account. So when you're thinking of your budget, you want to make sure you think of what your budget is based on the net pay that you bring home, not the gross pay from your paycheck. Because the lender may say, oh, well, Mr. Buyer, you qualify for a $250,000 house. And all of a sudden that $250,000 is $1,400 a month. And you just told the lender you wanted to spend $1,000 a month. Guess what happens? If you've gone to contract, you're in trouble. So you want to make sure you have that really good conversation with the lender so the lender knows exactly what you're comfortable with. So, because what we do then is we then take that payment and we turn that into a sales price. And we go back to your agent with your permission and say, hey, I've talked to Mr. and Mrs. Buyer. They want to spend $1,000 a month. That is now $200,000. Ethan is going to take that and say, okay, I'm going to turn that into a search and we're going to look at everything that's $200,000 or less.
Yep.
If and when Ethan says, oh my gosh, Liz, we just can't get a contract. The inventory is going so quickly. There's nothing here. Then you sit down, the buyer comes back to the lender and says, okay, my agent says there's nothing out there for 200. What does a $205,000 payment look like? What does a $210,000 payment look like? So you can budget that, because as Ethan just shared with you a little bit ago, house prices are very competitive. You may have to pay a little more than what you thought you were, but you want to know that going in before you actually go to contract to buy a house. Because the worst thing you can do is fall in love with a house and then you can't afford the payment, or you don't want to make the payment. So you want to make sure you look at all those things and work very closely with your agent and your lender. And if your lender isn't working with your agent and vice versa, you need to get a different set of people to help you.
Yeah. Yeah. I mean, that's a great point, because people, I always hear like people are like, hey, is it really a good time to buy a house? And you hear that all the time.
Right.
And what I tell people is, when considering buying a home, keep in mind interest rates and home prices, they move in opposite directions usually.
Yes.
Like, so
Yes.
Some people, they're like, well, when home prices are up, it's a bad idea to buy a house. But, if the interest rate is really low, then that can offset that. And you might actually be paying the same as if you were going to buy, like, say, a more expensive house.
Correct.
And yeah, that's something we get asked all the time. So what are the interest rates right now? Just so everybody knows.
Yes, absolutely. And interest rates, if you were looking at interest rates 18 months ago, they were the lowest rates they've been in history. I've never seen rates, like I said, I've been in this business over 25 years. I've never seen rates as low as they were 18 months ago. Before 18 months, they were sitting at about 3.5%, 4%. Right now, rates are going up and everybody's hearing the Fed, oh my gosh, we got to fight inflation and rates are going to go up. Yep. Well, there's a big difference between the interest rate when you buy a house and the interest rate when you go to buy a car or furniture or your equity lines or your credit cards. When the Fed says they are raising interest rates, that is going to affect your credit cards, your car payments, your furniture loans. It is not going to affect things like your interest rates on your house loan, because that's calculated totally differently. Does that mean that interest rates are not going to go up? No, they are going up. They're going up a little bit. They've actually gone up. They're sitting at about 3.5%. If you need help with down payment assistance, those rates are still really low. They're below 4%. They're at 3.875. But as rates start to climb, this is where you want to stay in close contact with your agent and absolutely your lender, because if you get qualified today, and let's say the rate is 3.5 today, and all of a sudden you wait 6 months because you're thinking that more houses are going to come on the market, and you don't talk to your loan officer and rates have now gone to say 3.875 or 4%, that is going to change your payment. That may have you go back to your agent and adjust your sales price. So rates are going up, but they are still historically low. When I bought my first house here in the Carolinas way back in 2005, the rates were almost 7%. So you just have to kind of take it with a grain of salt. When my mom and dad bought their first house back in 1989, rates were sitting at 16.5, was one of the first loans I ever did. So rates right now, when somebody says 3.5%, it's super low, and it's a great time to buy a house. And Ethan can add to this point too. Property values are going up. They're still going up. They are going to continue to go up. Yeah, I'm not seeing any market corrections with sales prices. I may see some sellers becoming more realistic that they're not going to get the $40,000 or $50,000 over asking prices. But talk about the real estate side of pricing a little bit to kind of give our listeners an idea of what that looks like.
Of course. So right now in the housing market, in Charlotte, North Carolina, which we're Liz and I are both based out of, it's up about 19.3% from last year. So we're at about around $350,000 average price point, and we're seeing multiple offers on just about every listing, especially anything that is in that anything usually in the 300s, anything that might definitely in the 200s. I'm seeing multiple offers all day on those houses. And with that, I mean, we have like an inventory, the inventory rate right now, which absorption rate is, I think it was last time I checked was like 0.6 of a month. So what that means basically is if there was no more homes to come on the market, we have just a little over half a month worth of inventory to last us. So it really high demand right now. Need a lot of houses to sell. So if anyone's out there, I got to make that little plug. If anyone's out there and they need to and they're wanting to get a good price for the home, it's an absolutely wonderful time to do it.
Perfect time, yeah.
And interest rates, hey, on the buying side, interest rates are still really low, and it's a great time to buy as well, because your payments, they won't be that high either. So yeah, so I mean that's basically everything that I was going to mention. I don't know how much time we have left here, but I just wanted to open it up just in case anybody had a question. And always, if you're watching this through the recording, feel free to message me or message Liz. I will put our contact information below, and just so you can reach out to us anytime. But yeah, if you have any questions at all, feel free to reach out to us, and don't be hesitant, because we're here to answer your questions, and we would love to help.
Do we have any questions at all from anybody that's out on the call? I don't see any questions coming through the chat. I don't know if our listeners have any questions either. So
yeah, we should be all set then. Well,
oh, wait, we have one. Wait, we have one. Okay. She says, I have a question. Okay. Let us know what your question is. We can see in the chat box. What's your question?
Okay, I'm trying to rephrase my question.
Okay, no worries. There's no wrong question, so go ahead.
So I kind of could listen one of the part when you were talking about how do you get your pre-approval letter and all this kind of stuff. So what do you look like when you are trying to get a loan, like on the person? Do you see their income, or how does that work?
Yeah, that's actually a great question. When a mortgage person actually does a pre-approval for the buyer, we take an application, and that consists of your name, your address, your social security number, your birth date, and your employment information. And then what we do with that information is we actually then pull credit. That gives us an idea of what your financial situation is. As far as if you're looking at, am I ready? Do I qualify for the basics? 2 years of employment is what we look at. Now, if you are just coming out of school and you have gone, let's say a person has gone to college or a trade school, and they have gotten a degree in whatever the trade it is, and that's the area that they're working in, that actually qualifies as well as far as being able to get a mortgage. Do you have particular situations? Are you worried about something? You're not sure if you meet all the criteria? Do you have a specific portion or something that you're worried about with qualifying?
I mean, we were just kind of looking into houses, and we don't have the best credit.
Okay.
And I'm in college right now, so it's not that I'm working as a full-time job.
Okay.
So I was just wondering, like, what do y'all look to get a loan?
Yeah, absolutely. Now, if you're in college, congratulations to you. That's a hard road to go. I remember that a while back. If you're working a part-time job, what we look at for mortgages, does it mean if you're working a part-time job that you can't get a loan? No, you have to be on that part-time job or have a history of working a part-time job for 2 years. If you have a part-time and a full-time job, you have to have a 2-year history working both of those. So if you're looking at your work history and while you're going to school, if you are working a part-time job and you have another part-time job, as long as we can come up with a 2-year work history, that's actually okay. There's nothing wrong with that. And when you said you're a little questioned, I don't have the best credit. What I encourage people to do when they say, hey, Liz, I don't have the best credit. Well, you may think your credit is different than it is. Like I said, in my 25 years, I've looked at everything from 300 credit scores to 800 credit scores. What I don't want someone to do is if they are thinking about buying a home, I don't want them to make a decision on what to do with their credit because they've listened to the neighbor next door, the coworker at work, and the person says, oh, I've got medical collections. I couldn't pay my doctor bill. I was told I have to pay off all these medical collections before I can buy a house. That is absolutely not true. What I tell people is don't judge your credit yourself. Let somebody look at your credit. Do not try to go to the credit repair people until you have a lender look at your credit if you are trying to buy a house, because you may end up wasting the money paying them the $89 a month to help you fix your credit when you don't need it, when that $89 a month could go toward your down payment, your earnest money, paying for an appraisal, something like that. And we're more than happy to look at it. We do not charge you a processing fee like a lot of lenders online. At Movement Mortgage, we do not charge you to actually look at your credit and help you get started to buy a house.
That's great. Yeah.
I have another question too.
Sure.
So, I mean, like, I haven't heard that different mortgages have like different interest rate and all this kind of stuff. And that's why people kind of choose which kind of mortgage people to go, or, you know, because they're getting a discount.
Okay.
How does that work? Like,
Okay.
why people decide, let's say like this company is offering them a less interest rate, but you know, they're not as great as the other one that is offering like more interest rate. Like, how does that work?
Absolutely. Absolutely. So when you're looking for a lender, you've got different types of lenders. You have your big banks, which I used to work at one of the big banks years ago here in Charlotte. Then you have your, what I call boutique companies. That's what we specialize in, like Movement Mortgage, which is what I've been at for 10 years now. That's all we do. We do mortgages. We are not like a big bank that does checking accounts and savings accounts and car loans and retirement accounts. And then mortgages are kind of over here off the side. Then you have credit unions. Then you have the online lenders. When you're looking at interest rates for a lender, every lender is going to have a particular rate, just like you saw. You may see some lenders online that, oh, why is that rate so cheap? And I'm talking to Liz, and Liz is telling me the interest rates are 3.5%, but this lender online is telling me, oh, I can get an interest rate of 3%. Well, there's something called a discount point. You're going to pay to get rates. If the old adage, if it sounds too good to be true, it's too good to be true. The lender is going to charge you to get that lower rate. And I always tell a first-time home buyer is you don't have extra money to buy a rate down unless it makes absolutely sense, because the difference can be thousands of dollars to buy your rate down. So my advice to you when you're shopping lenders is you want a lender that knows what they're talking about. That's what they do all day long. And you can actually get a hold of them. You can talk to them. You can communicate with them. And that lender is not afraid to answer your questions. Okay.
Yeah. And so when you're, let's say you get a lender, like, do you have to pay like to get your pre-approval letter, or like how does the whole process of getting a lender and then closing a house works? Like,
Sure, absolutely. When you actually go to a lender and you do your application with the lender, Movement, and I will preface this, Movement does not charge an application fee up front. There are some companies that do that. They charge a $400, $500, $600 application fee up front for the privilege of pulling your credit. You can call the lender, you can do your application. The lender should not be charging you for a pre-approval letter. If you want a credit letter, you supply pay stubs, bank statements. Again, the lender should not be charging you for that. All of the fees that are involved with a lender, a traditional mortgage lender like Movement, all of the fees that are involved with getting a mortgage, those go to the closing table, such as your application fee, your credit report fees, your flood certificates, your attorney's fees. All of those fees go to the closing table. In the process of getting a pre-approval, there should be no out-of-pocket expense to you in talking to that lender. That lender is here to help you get into a home. There should be nothing up front that you should have to pay for that lender. Some lenders online, they'll say, hey, we're happy to do this, but you need to pay us $400 for the application fee. If you are having a lender that's charging you an application fee up front for the privilege of getting a letter to give to your agent, you need to find another lender.
Yeah.
Thank you. And just my last question for the day.
Sure.
Sorry, I'm asking a
No,
lot of
you're
questions.
fine. No, you're good.
From my mortgage lender and a real estate broker, just for Ethan, for you both, what tips would you give a first-time home buyer? Like in regards either mortgage or like lender, or, you know, kind of tips what you would recommend to do first in real estate, like, you know, kind of get ready, because, you know, people sometimes scare buying a house, especially since they're first-time home buyers. And I was just wondering, you know, I mean, I kind of am scared too, but how would you give me some tips on how to be comfortable on doing it? Go ahead and buy a house.
Right. And Ethan, I'll jump in and then you can jump in as well. What I was saying when we first kind of started the call originally is the lender that you're wanting to choose, it's a lender that you need to be comfortable with. The first step in the process of buying a house, when you think you're actually wanting to buy a house, you need to figure out what your budget is. You need to figure out where you are financially, and you need to find a lender that is absolutely willing to help you. You also need to have a lender that's had the experience of working with first-time home buyers. Not every lender or not every loan officer out there deals with first-time home buyers. And what I mean by that is there are some lenders out there that don't offer down payment assistance loans. They don't understand what it's like to do a credit rescore, meaning helping a buyer get their credit situation up where it needs to go. You want to make sure you find a lender. And Movement is that example. Like I said, I've been doing this 25 years. We do all of that for you. We do all of that. We help you from the very beginning. We help you work on a budget to figure out what your budget is. We help get your credit where you need it to go. We tell you kind of what you need to have in the bank. Once you determine all of that, then you want to be able to have an agent that is willing to work with you no matter what your price point is. Okay. You may be a first-time home buyer that says, you know, I can't afford a lot. I can only afford a $150,000 house. That's a lot of money. $150,000 is a lot of money. So you want to be able to find someone that is not afraid to go, oh, well, they're only going to buy a $150,000 house. I'm not going to deal with it. No, find somebody that's willing. I don't care if you're trying to buy a $50,000 house or you're trying to build a $5 million house. It's all about buying a house. It's the experience of it. And it is a joy to buy a house. There's nothing like putting your key in the lock and opening the door. And it's like, it's all mine and nobody can take it away from me except me. And you want to be able to find people that are working with you on your team. Your real estate agent is going to have a home inspector that protects you. We're going to have the appraisers that protect you. We're going to have the handyman that you might need those services. The big question or the big statement I can tell a first-time home buyer is make sure you are working with somebody that you feel comfortable with and you are not afraid to ask questions, because as a first-time home buyer, you are going to have a lot of them. And if that person gets tired of answering your questions, you need to find somebody else.
I totally agree with that. Yeah, I'll just go ahead and jump in. So yeah, I would say for someone that's nervous about buying their first home, I would just say, like you said, find someone that you trust, you feel comfortable shopping with, find a real estate agent that you don't mind asking questions to, and you believe believe and rely on their experience. And we're here to guide you throughout the entire process. Like, no matter you're just getting started, we can connect you with the lender. We can, or if you're past that step, we guide you through every step. No matter, it's different for everyone because everyone has a different time frame.
Yeah.
We can move as fast as you want. We can move as slow as you want. But no matter what, at the end of the day, whenever you get that key and you put it in the door, like Liz said, that's going to be the best feeling in the world. And I just say, trust the people that you're working with. That's what we're here to do. We're here to help you. We're here to help guide you through that process and guide you to home ownership. So, yeah, that's a great question.
And I think the big thing too is you want to look at your timeline. So for example, you're starting on this journey. You've joined us on our call today for our question and answer session. You're thinking about that. So does that home ownership timeline, is it 6 months from now? Is it 3 months from now? Is it a year from now? Are you renting an apartment and your lease is up in a year and you just said, hey, I'm working a part-time job. I'm not sure, my credit's not the best. Well, you want to start that journey now. You want to look at that because it may take you, depending on what your credit situation looks like, it may take you 6 months or a year, depending on what it looks like. Then you know you've got all that time to plan instead of, oh my gosh, my landlord is selling my house and I need to jump in and buy tomorrow. And the lender goes, oh geez, we can't help, or there's no houses out there in the price point. Your agent's trying to scramble. You don't want to scramble. This is not a process that you want to feel rushed and scramble. So
Right.
even if you're not ready for 6 months, but you want somebody to look at your credit, have a lender. Like I said, I'm happy to help you. Have a lender look at your credit so you know, is my timeline realistic? Is my budget realistic? Do I have the money that I need? And do I have the time that I need to get to where I'm trying to go?
Right. Yeah, that's great. So I actually have, if anybody here or watching the recording, if y'all would like a copy, I have a free home buyer's guide that I'm happy to send y'all, and I actually have a video series that I'm working on. It's called the Home Buyer Series, and I go into detail on a lot more on what we talked about today, and would love to answer any other questions. I'm sure Liz would too. So
Absolutely.
so we'll leave our contact information and wrap it up here. But Liz, is there anything else you want to add before we go?
No, I'm just excited for
Okay.
everybody on this. I'm just excited for everybody on the call to look forward to being homeowners. I think it's a great feeling and it's a nice tax write-off too. So don't be afraid to get started.
Oh yeah, for sure, for sure. Well, thank you, Liz, for joining us, and everyone.
Oh, we got a question. Yep.
Sure.
Go ahead.
Okay, I'm Sherry.
Hi, Sherry.
I was wanting to ask, when you buy a house for the first time, who's responsible for the termite control and the septic inspections, and to know that you've got enough water
If you live in
a rural area?
Ethan, that's your ball. That's in your ballpark.
Okay, so you're just wanting to know as far as septic, if who pays for that? Is that what you're wondering?
Yeah.
And the term.
Yes.
Okay, so yeah, so if you're wanting to have a septic inspection, and this goes with home inspections, termite inspections, all of that, unless you're doing a VA loan, I believe it's VA loan. In the case of a VA loan, the seller pays for the termite inspection, but otherwise the buyer pays for any type of inspections that they would like done. And I recommend since you're in your due diligence period, you're going to want to do any inspections possible that you possibly can, and you can afford to do, because the last thing you want to do is get stuck in a house and it be in your name and you realize you just bought a bunch of problems rather than a nice house. So but yes, to answer your question, yes, the home buyer does pay for the inspections, and that's during while you're under contract.
Okay, and question I have, if there is a lien, if you find the house that you want and you really love, and there's a lien on it, what happens there?
Okay. So if there is a lien on the property, do you mean like a mortgage lien on the property, a mechanics lien? What kind of lien on the property?
say they borrowed money and they didn't pay it back.
Like if somebody
and
borrowed
they
money,
used the house as a collateral.
yeah, if they
Okay.
use a house, yeah, for a
Right.
collateral.
And that's a great question. And we do see that in the mortgage business. If a person is trying to sell a piece of property, and that's called a mechanics lien. And basically what happens is, in order for that person to sell that property, that lien has to be paid off in full at the time of closing, because the lender, if you're getting a mortgage to buy that home, the lender is not allowed to provide clear title to you unless that lien has been paid off. So if the person, didn't pay the contractor that was there, and there's a $40,000 lien on the property plus the mortgage, they have to be able to pay that off at closing or they are not able to sell that house.
Right.
Okay. All right. All right. Thank you so much.
You're welcome. No problem.
Any other questions?
Okay, I think we're good, Ethan.
All right, perfect. Well, thank you for everyone that was able to log in and watch today. And Liz, thank you for hopping on as well and
Sure.
hosting this with me. We're planning another one, and just keep an eye out, because we'll let you know what time and what day is going to be best, and we'll have another one of these shortly. So yeah, thanks again for everyone logging in.
You guys have a great night. Thank you so much.
Have a good one. Bye.
Bye-bye.